Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 6th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media as the Wolfman, where I've talked about everything from economic and geopolitical, where that impacts the overall market analysis. Well, I do those same things in these daily market commentaries, but I layer on top of it trading strategies that I implement into my portfolio in order to help you guys learn how to trade options and increase that overall yield in your portfolio. No better time than right now in and around this pandemic that we have going on. Everybody's at home in quarantine to learn something new. So I implore you guys to check out some of my webinars because I have specific rules in and around every single option strategy that you need to follow in order to implement into your portfolio. So you come up with a market assumption, whether or not it's kind of in line with mine, or you have your own, which is what I really want you guys to do, is have your own market assumptions. Then follow these rules because it will lead you to the correct option strategy for that particular assumption. All right. So without further ado, let's get on with the overall market data and economic data. We've got across the pond construction PMI, Purchasing Managers Index, out of Great Britain. And of course, that is below 50, which is contraction in the economy, coming in at 39.3, lower than the expected 44 that we were looking to get there. Nothing really here in the United States. As it is a Monday, we usually see pretty light volume there. So let's get on to the overall market. Crude oil, it's off by about $1.48. All right. Well, Friday, we were going up and to test that $30 a barrel mark because I had mentioned this. Trump trying to get Saudi Arabia, the Crown Prince, and Russia together over the weekend in order to try and cut back on some of the oil production, because here in the United States, it is crushing one of the only areas that haven't seen massive layoffs. And if we see crude oil at these lower levels, despite the fact that, yes, it will help increase velocity of money from consumers, 50% reduction in demand for gasoline, which basically means that it is mostly truckers and stuff like that coming from the diesel aspect. So we're not seeing it from a consumer. Manufacturing just falling off the cliff for their demand as well. So all of those things creating the perfect storm and driving prices down. You know, they're still producing and there's not going to be storage. So it's going to be at a point where people are talking about, well, I'll pay you to store this and put that into a negative price, which is just crazy to think about. But anyway, crude oil I thought would actually be down a lot further because on top of all of that, the talks between Saudi Arabia and Putin broke down over the weekend, and they pushed it out for another 4 days or something like that. I think it's on the 10th is when they're supposed to meet up again. So crude oil, I don't know how long we can hold on to this. It looks like to me that prices are going to go down because I don't think that they're going to come to an agreement, to be quite honest. All right, gold moving higher by about $43 here, despite the fact that we're seeing equities really drive, and the dollar is at 100 right now. We haven't seen those kind of numbers since like 2003, where the strength of the US dollar is really gaining some momentum to the upside. So this being a dollar denominated product, we would think that strength in the dollar would actually drive this price down a little bit, but it really is not today, as people are flying to buy gold here. And it looks like we could easily test that 1700 mark. We came just shy of that earlier today, as you can see, $4 shy of that mark. Then we go over to the bonds. Bonds losing a little bit of momentum, down over 1.5 points right now. Again, I've talked about this. I think that bonds are going to kind of hang out here for the foreseeable future. Yes, this is a forward-looking product. A future is what is expected down the road, and we're priced in pretty good, I think. This 183 area, which is lining up right here. I'm going to call it 183. You know, that is a pretty good line of delineation. We're about 1.5 points away, or almost 2 points right now, 2 points away from that. So that is going to start acting as resistance, because anything higher than that, remember when we have a teeter-totter here, and when price goes higher, so if price is increasing, then we see percent go down. That's the interest rate goes down. And anything above that 183 level is basically where we start to see interest rates for the 30-year bond go below 1%. So that, I think, is going to be hard pressed to sustain for a long period of time at this given juncture anyway. All right, the VIX coming off by about $2.5 or 2.5 points right now. I've talked about this. I don't think that we're going to see this V-shaped recovery in the equities, at least for, I can't even say that. We just aren't going to see a V-shaped recovery. I think we're going to kind of hold off here. We're going to get these massive moves. The Dow 1,000 point move is the new 100. When we used to have a 100 point move in the Dow, that used to be a pretty decent day. A 300 point move was pretty outside of the realm, but we are seeing 1,000 point moves on any given day at this point as news comes out and information is becoming more readily available. Something I also saw here is that New York is claiming there's all kinds of cases coming out with coronavirus. I heard they were building temporary graves in the parks where they are digging ditches and temporarily burying like 10 people abreast in caskets, which is crazy. Something also to note, we don't have the testing for coronavirus at this point. As a matter of fact, a nurse friend of ours, not here in Arizona, but her husband contracted coronavirus from her, and he went to the hospital to get tested, and they basically said, no, go home. Those are people that aren't really part of the statistic, right? If you're not testing these people, the mortality rate seems a little bit higher than what it is. And also a lot of hubbub or conspiracy theory. I don't know if this is necessarily true or not, but we have influenza, which is the common cold, and then pneumonia as well, which usually kind of is attributed to influenza, and it's basically you get the mucus in your lungs and it starts to harden, and that causes pneumonia. Well, the same thing can happen here with coronavirus, where it turns into pneumonia. Well, that's usually where people start to die, is when you get that pneumonia, right? Well, both of these two viruses create that type of situation, but in the past, we've kind of attributed influenza going to pneumonia and saying the death rate was from pneumonia. Well, they're starting to say that coronavirus, even though it might turn into pneumonia, is still coronavirus. So again, driving those numbers higher. If you look at some charts that I've seen where pneumonia deaths are falling off a cliff, and that's because they're attributing it more so to coronavirus, which is also skewing the numbers just a little bit. Yes, it was probably the derived from coronavirus, but the conspiracy is that these they want the funding, so they have to say it's coronavirus. So anyway, we probably should say influenza is the cause of death, even though that turns into pneumonia. All right. Dow Jones, here we go, up almost 1,200 points on the day, back above that 9-day moving average. I think we're going to sustain this move and hold on to it. I don't think we're going to see anything really fall off a cliff unless something major happens. But again, we are right in and around where I've talked about. Now, a V-shaped recovery would cause this market to come higher. But what I think is really going to happen is we're going to have, moves where we have back and forth. I'm trying to get my right color there, but back and forth and just kind of putzing along here and there, and staying within a relatively tight area here. I don't think that we're going to see those bottoms get punched in unless this really explodes, and we're already starting to see some of the numbers flattening. So I don't think that we're going to see that happen. Again, here with the Nasdaq, I can pull this up and say, this is that area where I think that we are going to stay in and around this point of control. So yes, we are going to get these big moves higher today, up 400 points on the day, but tomorrow we might see something come back down and then get this, whipsaw back and forth, with these big moves, but sticking in and around this area. Today, something interesting to note, we're seeing travel and leisure really spike. Carnival Cruise, I think somebody said that, or I saw that Saudi Arabia making a big purchase into Carnival Cruises, upwards of 8% in that company. So that's a different discussion. Anyway, so travel and leisure doing very well today. I am staying away from those. I'm not going to jump in on the cruise lines or any of those, other than I already have a couple of airline stocks in my portfolio. I tried to, bottom pick on those, and Disney, which I'm getting, I had put to me at a higher level here, and just trying to lower my overall cost basis by selling covered calls against it, which is what we talk in these webinars right now. We're trying to do things that are very pertinent to what's going on in the world and our portfolio. So that's something that we need to stay ahead of, even in good and bad times, which the bad times, it's definitely something that we should be implementing in and around our portfolios, because we are overall long, and we try to create some negative deltas by selling those covered calls, lower our overall basis on it. Again, back to the markets, E-mini S&Ps, staying in and around those areas I'm talking about. I think that we're going to stay within these lines of delineation for a little bit longer. Yes, the point of control is a little bit higher for E-mini S&Ps. We could climb up there, but I don't think that we're going to get a massive V-shaped recovery and go for those all-time highs. E-mini S&Ps could trudge along and get back up to that point of control and then start trading in and around there. But at this point, I think that the markets are pricing in what the economies are looking like going forward for the foreseeable future, and those bottoms priced in the worst case scenario. So that's why I don't think we're going to go down there and see those. Now let's look at the E-mini S&Ps on the breakdown. This is the 30-minute chart. You can see overnight started out pretty bullish. A lot of journalists were talking about, they think that the market was going to free fall today, mostly based on what we were seeing out of New York and the cases moving higher. But the market's shoving that off and moving higher. I think most of this is driven by the banks that were really beating up some of that travel and leisure that we talked about. And those are moving higher. So with that being said, Micron Technology, if you guys remember, I went in and sold some puts in here. Would be happy to, because they're part of that fight for the coronavirus. And if you guys remember, I went and sold some puts in there, and I sold the April 37 puts originally for... I can't remember now. I just looked at it for 88 cents. Yes, for 88 cents. And that was back on the 26th. So pretty good strike location, as you can see here. 26 landing right here. So right where we are, volatility, though, you can see has come out quite a bit. So that was more the product of the success in this strategy, getting in with high implied volatility. As you can see, we dropped about 30 percentage points in the implied volatility, which is why we want to take advantage of these different opportunities, and this was one of those. So the market basically gyrated back and forth, but today with that volatility and the theta decay obviously helping me out, get out for well better than 50% of my max profit on that. I did squeeze that out just a little bit more than what my rules call for on this trade, but today with the move higher, it really helped out. So I bought those back for 19 cents this morning. All right, so those are that's the only thing that I've done today. One thing I do want to talk about, I put this in my portfolio not too long ago, which is Thor Industries. They make RVs, the RVs, the travel trailers, the pop-ups, all of those things. They bought out Jayco a while back, which is probably the name brand everybody really sees on the streets, more so than anything else. But they build RVs, travel trailers, and the whatnot. Now, I've talked about this. I think that more people are going to get cabin fever. They aren't going to want to stay in hotels as much. There's going to be a big sector of the economy that goes out and starts buying this. Well, I talked to a couple of people this weekend, and a couple of my friends' parents went out and bought a 35-foot RV, and well, they were talking to that RV dealership. The guy was totally blown away at the number of people and their sales going through the roof. So I think that these RV dealerships and RV manufacturers are going to have a great year, despite the fact that we're going to see some weakness in the automobiles and stuff like that. This type of travel, I think, is going to become more and more popular. Even though most of the major national parks are closed, there are still places to park. I mean, they're still letting RVs parked for free at Walmart. So people just want to get out and about, but keep their social distancing. I think that this could be the thing that really is what people are going to be looking to do going forward. All right, so that's about it. Covered that Micron technology. Like I said, they were the April 37 puts that I sold for 88 cents, bought them back for 19, so a nice win there. Portfolio looking really good today with this market move that we've got going on. So I'm just going to kind of hang on and keep my eyes on these things. I'll let you guys know if I see any other opportunities, but most of the things in my portfolio are working out quite nicely at this point anyway. All right, so that's all I got for you guys, other than check out those webinars. Make sure you go over my disclaimer here, because it is an educational company. I am not one of those guys that gives you trade recommendations. That's not what I'm here to do. What I'm here to do is talk about my trades, how I'm implementing these option strategies into my portfolio so that you guys get a real life example. I'm not cherry picking anything. If the trade is working against me, I am letting you guys know. Those are the ones I'm going to be talking about the most, because those are the ones that are the thorn in my side that I got to stay mechanical and try and lower my overall cost basis to get that back into a winner. So without further ado, we are an educational company. I want you guys to learn to implement these things yourself. Take a moment, pause, read over this. There is a risk factor here that you could lose quite a bit of your money, especially in these types of environments. There's financial risk that is inherent in trading and investing. So please look over that and make sure you're a big boy and girl, and remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, so if you can't take that, take it easy.